Welcome back. As the South African Reserve Bank gears up for its next MPC meeting, the dynamics surrounding this decision have shifted rather significantly since the last MPC meeting in late November. A confluence of international events and local economic performance have driven this shift. Frederick Mitchell, Chief Economist at Aluma Capital, joins us now. Frederick, great to be with you today on the close. Now, what happens at the end of January? What are we looking at?
Yeah, well, like you said, there's a couple of things that happened internationally. That's to the benefits of Africa, if you look at it from an inflation perspective. And we might just see a reduction in rates come the 29th.
Right, 25 basis points. They don't normally go larger to 50, do they?
Yes, my assumption is that 25 basis points will be on the cards. I guess now is the right time, given all the indicators that we see in the market.
Yeah. Looking at international influences at the moment, of course, we've had a week of US President Donald Trump. Does this not worry investors? Does this not kind of get Lesetja Kganyago to sit up in his chair and say, hold on a second now, we need to be cautious?
I guess if you look at the Reserve Bank, there will always be a margin of cautiousness within the decisions. But if you look at let's just look at the rand. Rand's been strengthening. We've seen it's gone from just above the 17 rand to 16 rand 50 around, and we know it's based on dollar softness or a weaker dollar, and also coupled with that, with what we've seen in the Venezuelan crisis, that the oil prices came down significantly, and analysts and market speculators expect an oversupply of oil. So that's good news for us. If the oil price comes down and rand strengthens, it's good inflation numbers for us.
And this could actually continue because, like you say, Venezuela, he was looking at 50 million barrels all of a sudden going to the United States. He may flood the market a little bit, and that's not great for those wanting to make money from oil.
Yes, I guess if you're a Chinese investor having pumped in money in Venezuela, that's not good news for you. But for the rest of the world, that's where your inflation is closely tied towards your energy prices and transportation prices, which is linked to your fuel. I guess that's some good news if we have a low oil price internationally.
And also gold as well. Now, of course,
gold is always is a good commodity for South Africa. If there's some uncertainty in the air, we tend to do good, both from a financial standpoint, if you look at the foreign reserves that we get, as well as from a currency perspective.
Yeah. Where should the repo rate be now? What's ideal? Because we've gone down, we've gone up, and now we're going down again. Yeah.
I guess we're at a fair place where we are now, and given the point target that's been announced, or the lower target that the Reserve Bank is going for, I guess we are close to where we could be, maybe another 50 basis points off, coupled with this. Let's say if you do 25 now, you can do 25 later, and then I guess we are close to where we should be. If we know that Reserve Bank or the Fed and US have reduced rates, which also support the rand, and if the Fed lowers the rate, it bodes well for us, lowering the rate in South Africa.
Yeah, but is the US Fed lowering their rates because of pressure from Donald Trump? Because he's been very explicit with them. Guys, bring those rates down. Jerome Powell saying, I don't want to, but they're doing it.
For the US, they tend to prefer, say, a lower inflation target than we in South Africa do, and that's why the Fed has been also hawkish on the interest rates in terms of what's happening to the inflation rate, getting it closer to, let's say, where they prefer it, and that's why Mr. Powell is very cautious, lowering it further, even though there's some pressure from the Trump administration at this stage.
Yeah. Let's park the US, let's put them to one side. What about London, the rest of them? Are they also looking to bring their rates down? Because we normally all go in unison, up and down.
We've seen that the European Central Bank, as well as the ECB, has also lowering rates late last year. So I don't expect much at this stage that they're going to lower again. But if you look at the exchange rates for South Africa, we can say that we've seen a stronger rand against the dollar, but it is not necessarily against the euro and the pound. We've say lost some value since 2025. So it's basically a mixed bag at this stage, just currency wise.
Yeah. So this is a US problem, a US dollar problem. It's not a widespread problem.
I wouldn't say it's a dollar problem. It's America First challenge, to put it mildly.
Yeah, challenge. We'll keep it there. Right, so having a look at our interest rate and where it is, they've got this target of 3%. It used to be 3.26%. What happens if we don't get close to that 3%? We go out of that 1% leeway and we start climbing. We could see it going the other way.
Well, I guess given Lesitic and Yahoo as the governor having said that the data will be a determinant factor, we can expect that they might then start a tightening cycle sooner than later, rather than later. But if you look at, let's say, look at inflation holistically, core inflation 3.4%, food CPI excluding food is like 4.4. But where it really gets interesting, if you say look at some of the let's say basket of commodities like meat, which has gone like 12% in November, which is way above what the Reserve Bank would prefer, and that's going to play a role if we see these type of, let's say, pressures emanating from different places in the economy.
Where are the other pressure points as well? Like you say meat as well, but where are the other pressure points? Because it is a little bit worrying.
Education is always a pressure point for households. The cost of education in South Africa, and also if you're looking at household utilities and services, which includes household rents, does not necessarily follow the 3% rule or the inflation rule, as well as you look at your administered prices, let's say water and electricity, that does not go by 3.5%. We're looking at now, saying this morning that Eskom made a mistake in the pricing, is going to recoup another close to 20 to 25 billion rand from the consumers this year or this financial year, which doesn't bode well for inflation expectations on the other side.
But it's interesting because if you have a look at that Eskom number, I think it was the year before was 12 point something, then it became 5 point something, then 6 point something. It keeps on going up. That's now been scrapped by the Pretoria High Court. They said it was a bit of a thumbsuck. But what are we looking at now? Is that a final figure, that 22, or is that another thumbsuck? I mean, when will we get some sort of clarity on this?
That's quite difficult to say at this stage. We know that Eskom has got cost pressures that emanate from different sources. I don't want to go into that because that gets into the political sphere of things. But if you have a 20, so let's call it a 20 billion rand under collection based on your fees or your increases, that's quite a margin that needs to be covered within this year. And someone's got to pay for that, and somewhere is going to show up in consumers' pockets or out of pocket.
But the cost of living at the moment, it's high. I mean, I know the inflation rate is down, but you can feel it really is high. The ANC, of course, having their January 8 statements, that's tomorrow. What does the president need to do, need to say to bring things down, to bring it, sort of have an easier life for South Africans? We're very angry about electricity prices and also water as well.
If you look, just a quick point on water. Water is escalated more in price over the years than electricity, but people don't realize that at this stage, because electricity makes far a bigger chunk of their household utility bill, which is problematic when you look at out-of-pocket expenses for let's say households. What the ANC can do, that's quite difficult. I guess we need to get our trade up. We need to get South Africa's economy gearing up for more performance, be more performance-driven. And even though we like to, let's say, square up to the BRICS countries, they are net exporters to South Africa. They don't really take South Africa's products. And that's not good news for us. So we need actually getting access into the US, whether we like it or not.
But we might not have that access to the US. These trade tariffs, what are they going to do to us? Because they're there. The US is not happy with us. You'll see this weekend in Simonstown, Russia's pitched up, and so is Iran, and some of the battleships as well. This is only going to anger the United States. We may have to go with someone else.
Now we're getting into the political side of economics. Let me say this. If you look at the Simonstown, let's say, war games or war preparation or war games, I don't know what you call it, but that's not the sign of non-alignment. And that's not going to have a good look for us when the US looks at us, given the coming of 2025 and what happened or transpired in 2025. It's like saying you want to move to a different block that will do uptake of your of your products. Firstly, that's quite difficult or quite challenging, let me put it this way, because if you look at the agriculture exports, there's costs involved of moving things from South Africa to the rest of the world, Europe, and maybe beyond, and that cost implications. It's not only in terms of your logistics, but also in can you keep your products fresh. That's number one. And then when you look at the manufactured exports, if you look east, they are manufacturers and exporters themselves. So they're not going to buy really your stuff or your products, and that's really the concern. So, and if you look at Africa, although Africa has been growing, it doesn't have the market as a continent to buy South Africa's high-end manufacturing products that we produce and mostly export to the US. That's now in a conundrum.
Right, so to wrap us, the 6 months ahead, we're looking at from now until June, July. Interest rates should remain stable, you would think?
For now, I guess maybe there's 25 basis points now because that's the favorable position. Maybe if, let's say, economics indicators hold up, we might see another 25. But I wouldn't hold my breath too much for another 25, apart from the 1 and 29th. And then I guess a big one that South Africa is going to look at where we are heading in terms of politics and economics is the 2026 municipal elections or local elections are going to tell us what the barometer is saying of how South Africans are feeling in general about, let's say, government and policies.
Yeah, I suppose as we get closer to those elections, if there aren't favourable conditions for South Africans, they will show that at the polls. So perhaps if interest rates are a little bit lower as well, this could be good for our governing party. It's a very tricky situation.
Yeah, it might be good, but I guess if you look at the unemployment situation where we have got the youth unemployment crisis, lowering the interest rates is not going to solve that problem, let's say, within 7 months. Or 6 months, and that's the big question. It's like we are creating less jobs in the economy by economic growth than people are entering the market from, say, leaving school and tertiary institutions, which adds to the governing parties or the ruling parties' problems and headaches.
I won't hold you to this. You're saying 25 basis points end of January.
For now.
Lovely. Thank you, Frederick. I really appreciate it. Thanks so much. That was Frederick Mitchell, Chief Economist at Aluma Capital.